Making the shit up as I go. Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, and we're a couple minutes late. Little technical issues this morning, but what's new?
Hey, it happens.
Does it?
Does.
I had to turn. It was so bright with all the lights with the new camera. I just swapped in, and now I look gray.
Great.
Great. A little bit more light there. A little bit more light there, and that's a little bit better.
Yeah. What's in
store
for the Friday?
Well, today we've been waiting for Powell to speak at the end of his thing. It was earlier today.
Yeah.
And they said a few different things.
What they said.
He said, the time has come for policy to adjust and direction of travel is clear.
Which means,
but the timing, pace of rate cuts will depend on incoming data, evolving outlook, and balance of risk. Okay, what does that mean?
So he said nothing.
Hold on. My confidence has grown. Inflation on a path back to 2%.
Really?
However, labor market has cooled considerably. Unlikely source of inflation. We'll do everything to. Should I keep doing that? Or just go, we will do everything we can to support a strong labor market.
Okay.
Yeah. We do not seek or welcome further cooling in the labor market. Inflation has declined significantly, much closer to objective.
So essentially, he said nothing.
Well, he said a lot, but it just
inflation hasn't.
Economy continues to grow at a solid pace. Less upside risk of inflation, more downside risk to employment. No shit.
Yeah.
Task of restoring price stability, not complete, but we made good progress. Worst of the pandemic-related economic distortions are fading. Just not the Biden administration. I mean, he didn't say it, but
throw that in.
Yeah.
Did he touch on the 818,000 made-up
No,
jobs?
he's not going to. So at the end of this statement, all he does is just do a brief, quick, boom, here it is, and we're out of here.
Right.
So I've been listening to a lot of stuff all morning because I had a lot of time. And one of the things some people have said is buyers are waiting until September 18th. Because they hear the Fed's going to cut rates, and that's going to adjust their interest rate.
That's not.
But what they don't understand is we need to remind buyers that the rate adjustment will already be in place in mortgages before that effect.
Right.
And that's now, if that didn't happen, then they would get worse. But, that's what they're looking at. The people are saying, I'm waiting until September 18th because that's when the Fed's cutting. Okay, well, that's short-term interest rates. What the bond market's going to do ahead of time is expect that to happen and going to lower the rate.
Anyway.
Yeah. So you need to not wait for September 18th. You need to do it now.
Well, but wait a minute. Let's analyze this. So if you wait a little bit longer, you've got a couple things going against you. Okay. And that's
more people,
be increased competition, higher prices, right?
Mm-hmm.
But yeah, go ahead and wait till September 18th.
What the heck?
That's the smart thing to do.
Who cares?
Be fiscally unconservative.
Well, the other thing is, from what we're looking at, we need, a rate in the 5s, even 5.99 for 3 months for buyers to understand the market has changed. Right. Not one day.
Right.
We had 1 day of very low rates, and if you weren't in place, SOL.
Well, and if it was just for 1 day, we would have 215 more realtors applying to be realtors, or people applying to be a realtor.
Speaking of that, we've lost another a third of all mortgage originators are gone.
Geez.
Yeah. So that was like another 140,000 that we've lost.
That's a big cut.
That's a huge number. Yeah.
I feel sorry for those people because they were probably making a good amount of money.
Right. And and of the ones left, if you're at the 50% mark, you're doing 14 transactions a year.
Yeah.
That's not that
That's
much.
not much.
And that's the sad part.
I'm going to mess with Clay Smith right now.
Okay, well, you do that. New home sales, which measured signed contracts on new homes, shocking, increased by 10.6% in July at a 739 unit annualized pace. June figure was revised higher to 668,000 from the previous reported 617,000.
Okay.
They were putting them under the table. They were paying cash for them. They didn't want to count them. I'm
Right.
just kidding. The inventory of new homes on the market decreased by 1.1% to 462,000, while the median new home price increased by 3.1% to 429,800. Anyway, so what does that mean? Things aren't getting worse out there.
They aren't.
And supposedly, with what, even though I made fun of what the Fed said, it basically saying we're here, we are going to start cutting, but we're going to throw this little thing in there. If we see some numbers that come out a little bit, we're not going to have to cut at 50 basis points, 100 basis points. We're going to do a quarter. We're going to probably do another quarter, and it has
Little
nothing
increments.
to do with the election.
Did you read that about the NAR?
Which one?
The second from the bottom.
Second from the bottom.
I love it when they say inventory skyrockets.
We talked about this yesterday, and I saw that headline on Housing Wire.
Yeah.
And it said existing home sales tick up as inventory skyrockets.
Oh my
really?
God.
We have a total of 689,473,000 homes nationwide.
Yeah.
How is that skyrocketing?
It's not. Yeah. Because we're missing the mark by half. Right? We used to be at 1,200,000, 1,300,000 was a normal year.
I feel a little gray today.
I feel. I love that. I want to hear the last one. Oh,
so so what's happening in Florida? They were talking about Florida and why they're having problems there.
Yeah.
All the old condo buildings, all the older inventory has to be re-updated because of the hurricane standards.
Okay.
And that's what's causing the problem in sales and other stuff.
But you probably just shut them down.
So I just put that down there so if I had more time, because we haven't even talked about your real estate stuff yet.
Right.
So why don't we talk about that?
But I just love that.
Yeah,
Old condos need to be improved.
Well, yeah, I just easy quick there. There's just so much I had to put on there. And that was from, I watch Fox News, but I've been watching CNBC because they're not as much leaning one way or another.
They gotta give you what the facts
there's
are.
moments that they don't shut up the wrong side.
Yeah.
But other than that, it's been okay. But I've been trying to focus on more, overall bipartisan stuff.
Oh, I shared something yesterday just before we get into, it was on my story. And just before we get into the real estate.
There's also one more thing that I didn't make a slide for.
Okay.
But this just came out today. U.S. sues real estate software firm RealPage, claiming software-enabled collusion on rents. So it was a software for property management companies to put in all this stuff. But yeah, they're saying it's collusion, and they was able to keep the algorithm, allowed them to keep the rents up and other stuff like that. Okay, whatever.
I don't see.
There's so many other issues you guys can deal with, like everybody coming across our border.
Yeah.
How about all the deaths and everything else that's going on? And you're worried about rents.
Yeah. Okay. So it's titled Kamala's Math. And Kamala Harris says she will build 3 million homes by end of her first term.
Mm-hmm. That was a week ago.
Yep. 365 days times 4 years is 1,460 days. 3 million homes in 1,460 days equals 2,054 homes per day. Every day.
Yeah, okay.
Ain't gonna happen, folks.
That's gonna happen.
Anyway,
no, and that's why the $25,000 that they put out there that, hey, this is what we're going to do. First time home buyers get a tax credit. It's not going to work unless we have these 4 million homes that we need to get rid of.
Right.
The only reason it worked when Obama did it is because we had 3.5 million homes on the market extra that nobody wanted except for investors.
Right.
That were smart. And so that was to spur people to go out and buy, because he wanted to tell people it's a good time to buy. And everybody was like, no, it's not. Chicken's falling. The sky is falling. And all the investors like, yeah, that's correct. You keep thinking that, because I'm just going to keep picking them up.
I'm going to pick them up.
Yeah,
you guys.
I got 500. I got 500 homes now.
You keep renting.
Yeah.
535 closed sales per day.
So it's on average.
Yep.
We're usually,
But the listings are up by about 100 per day.
This is California.
Week. Yeah. Right. California, week ending August 17th, 709 listings per day. I had 2 of those. This is looking a little bit better. Entered escrow is still down, but closed sales are up, and so are listings.
And they're what's going to happen is up.
Yes.
Right. Is that up? Is that next? Nope, it's down.
It's down. The realtors are finally beat up. They've had,
Aren't we all?
7.5 months of, I swear it's going to get better, and it hasn't.
What are you talking about? 7.5 months. It's been a year and a half. It's even like Barry Habib did a whole thing the other day, and he was talking about, hey, I messed up a year and a half ago. I thought it was this, but if you look at the numbers on employment, that's what skewed the market for a year, is that there was an extra 1 out of every 3 jobs. It really isn't there.
Yeah. And if you recall, beginning of the year, these numbers were so high, so positive. So everybody thought, oh, everything's going to change. We're going to be back in a normal market again, or a much better market, much more active market.
We need a much better market, not a normal market.
Exactly. Well,
this is our normal market. The market you're in is always the normal, new
normal. Oh, I hate that phrase.
I know. We'll deal with it. All right. So next week we have some news. We got durable goods on Monday. Not really going to do much, but then Tuesday, Case Shiller FHFA appreciation reports. And that's just going to tell us, hey, they're up. Our values are up 6%, 6.5%. I tell you, it was not a cigar. Consumer confidence. Wednesday, mortgage applications. Thursday's initial jobless claims. Second quarter GDP. Second read, because the first read was probably, we were doing so well. It's probably going to come in much worse. Pending home sales. And then Friday, Fed's favorite gauge of inflation, which is the PCE, the personal consumption expenditures.
Yeah.
That could move the market on Friday. Now, all this stuff is going to be waiting, all these reports over the next few weeks until the meeting on September 18th, when they actually come out and do what they're going to do.
Yeah.
So this is what they were talking about. I think I said earlier this week that they're saying that we're going to see some really ugly numbers going forward.
Right.
What we just did with the revised job number, that was almost 915,000 is really the new number. And that's public sector. Private sector was 1 million that didn't happen.
Oh, whoa.
Yeah.
Whoa.
Yeah. So there's some cooking the books.
I get this picture of this old guy with one of those bookie visors on, and magnifying glasses on the end of his glasses, and a cigar, and a wife beater shirt on, out there cooking the books.
Yeah, what's he got it over the furnace or something?
Exactly. He's just
got in a pot.
He's just moving numbers around.
Yeah. So I don't know what really happened. Don't really care. I'll work on my appearance this week, and I'll try to get darker. Not so gray.
I think it's your camera.
It is the camera. What I have to do is go in there and adjust the hue on this one, because this one doesn't have it.
I don't even see.
Yours is fixed.
I can't even see Hugh standing over there.
Yeah, he's short.
All
right, that's all. All right, so
Friday.
Help buyers understand they should not wait till September 18th. Anybody who bought between 2022 and 2024 needs to get in line for a refinance. When I mean in line, that means you get a hold of your client and you talk to them, or if you don't want to, send me their number. I'll take care of it for you, and tell them, okay, this is where we're at. When we hit this point, I'm just going to lock it and get your refinance going. Are we in agreement? You have to also explain to them, don't be greedy,
right?
Because they'll go, oh, what if I wait? Well, that wait it took a year last time to get any lower.
Yeah.
Do you want to wait another year? But let's just take a bird in the hand's better than 2 in the bush, a Karen, my grandfather.
My grandfather used to say that too, so it must be real.
But the question is, what were they talking about back then? At what time was that a bird?
Oh my God, that was after World War II.
All right, everybody, make it a great day. Thanks for being here, and Mike, thanks for being here.
Thanks for having me. Have a great day.
You too.
Bye.
Bye.